Also focus in on Vodafone Idea because I want to get Parag Bhai's view on this company and its set of numbers. But let's set the context first. I did take you through a few numbers, but Hiral's joining in to take you through the further details, including, I'm assuming, Hiral, you're going to speak about the average revenue per user, key metric to track. But overall, what did you think of the numbers?
So overall, if you have to look at the numbers in terms of the estimates, it's pretty much an inline quarter. Let's first look at the key highlights. The loss has narrowed on a year-on-year basis, but widened sequentially. So two parameters we are considering here. The financial strain, the debt, and the competitive pressure, that's what has impacted profitability. If you've looked at the lower subscriber loss, that is what is aiding the India wireless revenue. And you're seeing a slow improvement in terms of the top line as well as the ARPU. Let's break this down. The net loss we've already spoken about. In terms of the revenue, it's down around 1%. ARPU, what's interesting is it's come in at 175 rupees versus 173 on a sequential basis. So a very slow improvement there. But on a year-on-year basis, a stark improvement from 153 rupees. Apart from that, in terms of the capex, what's interesting is they've invested the highest ever quarterly number since the 2018 merger, though your FY25 capex has been slightly lower as per their guidance of around 10,000 odd crores. In terms of their subscriber base as well, that has been slightly lower on a sequential basis. Their 4G subscriber base has inched up. The subscriber churn, that is lower at 4.1% versus a 4.5%, which is actually signaling some bit of retention, so which comes in as a positive. And their 4G population coverage is also increasing this time around. The reason why we've seen an improvement on the wireless ARPU is because there has been a pass-through effect of a 13 to 14% tariff hike as well. Overall, if you talk about the network expansion, it's around 6,900 new towers that they've added, which is a positive. Their net debt to equity, that has improved slightly from the previous quarter. So that's again a positive. And in terms of the fundraise, the board has approved a fundraise of around 20,000 odd crores. This will be via equity or debt. One or more tranches is what they're looking at. But further details from the conference call is what the street is awaiting. Very quickly, in terms of what brokerages are saying, Macquarie has underperformed. They have a target price of 6.5. And what they are indicating is that there is no quick fix for Vodafone Idea's underlying fundamental challenges. They see a challenge to further equity infusion by the government, and they do prefer an Indus Tower over a Vodafone. And UBS has maintained their buy. They've retained their target price at 12. They've not done anything to that number yet because they're waiting for the conference call details to come in, where they're watching out for the overall outlook in terms of the fundraise, the capex plans, and what is their expansion strategy going to be looking like, because the overall softness in terms of business does continue. So there are multiple factors, and if you have to consider some positive, some negative, how the street will take it from here on is going to be interesting to watch out for.
You know, I don't know if the fundraise by itself is a bit of a short-term boost for the Vodafone stock today, possibly. I mean, a target price of 12 is something that seems difficult. Any thoughts here, Parag Bhai?
No, basically, I don't, as it was discussed that net debt to EBITDA, for me, it is too high. I don't buy any stock which has a net debt to EBITDA of more than 3.5x in my portfolio. Because we are managing public money and we are very accountable. So
there is a lot of public money going into support Vodafone beyond investors.
No, see, it's
tax money.
It's a genuine business which has gone through a problem, but the problem is that I cannot buy it below because of my net debt to EBITDA
I mean, it's like a patient with all four appendages that have been in plaster. Maybe one is on the way of coming out, but then you can't deny that you've got three more broken appendages.
Anything on the charts? Anything on the chart? No.
Not really. I mean, I could give you levels, but the trend itself has been so negative that every bounce should be taken as an opportunity to exit to whoever holds. So,